Alright, good morning everybody. Welcome back to episode 2 of Backtesting with a Purpose. The first episode yesterday, we explained the purpose of the Excel spreadsheet, how to track your trades, what a playbook is, what the real purpose of backtesting should be, and how to gather your data and what to do with it. So if you haven't seen that, go ahead and watch that if you will, get caught up. Today we're just going to jump right into it. The first thing that we're going to do is check the economic calendar for today's backtest, which would be Wednesday, December 7th, 2022 on NASDAQ. And so we've got this pulled up already. And there is no high impact economic news drivers. So we could either get CHOP or standard delivery. It could go either way. And let's just go back and see if we have it set up. First thing we're going to do, we're going to start like we always do when we're live trading. We're going to mark out the London session by identifying the midnight open, and then we'll mark out equity open and wait for that to happen. And I'll do that right now. Okay, now we'll play out the price action for London session and see if we have anything substantial. Okay, so as you can see, there's some pretty significant movement here. Looks like we've left these equal highs in place. However, there's an internal liquidity grab here on this 15-minute fair value gap, and I imagine if we go up to the hourly, it'll be, yeah, there's one right there. So we grabbed liquidity inside this 1 hour fair value gap, almost got up to midnight open again, and then shit the bed, and let's see how much. It's over 160 points. So we're not going to be looking for any entries. ICT says when the overnight session moves significantly, that's the move, and the next session should be extremely choppy, and perhaps the entire day. So, and let's move this out of the way. You see we came back all the way up, almost 100 something points to come back up here and take this buy side liquidity that we left intact. This doesn't bode well for entries, so we are just going to play this out and see how it goes, but I don't imagine that we're going to get a chance to enter on anything significant. But let's see. Okay, so we've got a sell side purge here from yesterday's afternoon session. Yesterday afternoon was purged by 491, 414 by nearly 85 points. And then we've got these equal highs left over up here. So there could be something, perhaps a breaker set up here. If you notice, we got a low, a high, and a lower low. This little V-shaped price action. And all three of these successive candles and the apex, the highest body, that's the breaker. So if we see something set up on the breaker, we could take it all the way up to the 15-minute buy side. However, we want to be really super careful if that's the case, because price actions move significantly during this session. So. Okay, let's get right into equity open, see what happens. So on this candle that spiked back down to touch the bottom of the breaker, we've already tapped above the EQ of the breaker. We could get in there and put a stop loss below here. So that's something that we can consider. Let's go ahead and take a position and see how that plays out. Well, let's just say we didn't catch the very bottom, but right about there, right below this low, we'll do a stop loss, and it could very well come all the way back down and chop us out from the original opening range at equity open. But let's see what we get. 75, so almost a 3-to-1 trade if it works out, which is nice. And it's not technically, it's not really a standard fair value gap model entry, although we do have a fair value gap right here. Let me pull this over so you can see right in here. So that could end up working out. If we don't get the fair value gap entry, then we're just not going to journal this one, and we'll skip to tomorrow's price action. So today's Wednesday the 7th. Wednesday can always get a little bit crazy, especially when Tuesday's made the low of the week apparently here. Or I suppose, I guess this is a Wednesday low of the week actually. Let's see how this goes. So as you can see, there was a fair value gap entry here. And since that was the case, we can go ahead and mark this in our journal. Actually, what I'm going to do first, what I've forgotten to do here, is, excuse me, let's take our before screenshot. So we'll do that now. There's the entry for us, even though it's an early entry. We could say that we waited for the fair value gap, which is valid. It looks like there's like a miniature breaker in here, a little baby breaker. This right here. Low, high, lower, low, breaker. take our long position. Let's just call it, with slippage, let's just say we got a close proximity order. I'm trying to be as realistic as possible. $25-point stop loss, approximately 75 or 80 points target. That puts us at a 3-to-1. It's pretty nice if it works out. Okay, let's call this our during screenshot, and then we'll go ahead and play this out and see what happens. So if we had not taken partials, we would have been stopped out. I would have, in my live trading, as soon as we touched midnight open, I would have taken partials, but we would have been stopped out on the rest of the position. And considering that there was a massive purge, so that's an external liquidity grab. Let's call this, let me pull this up so you can see. Post equity entry. Liquidity grab on the 15-minute was external. Displacement was well over 60 points. Stop loss level was 25 or less. We only took about 5 points of drawdown when it went into the fair value gap under our breaker entry. Price action is not so clean. It's not choppy either, so we'll call it average. Trade duration, let's see, what is this? Enter here at 8:31, exit at 8:37, so 6 minutes. Call it under 15 minutes. One fair value gap at entry. Yes, there was a 15-minute breaker as a proximity array. So if we scroll down, we have a post equity entry, external grab, more than 60 points. So this would have been an A+ setup on a technical standpoint, but because there was so much movement in the London session, we would probably want to downgrade this to like a B, just to be safe. And in a live environment, that's what I would have done as a trader. So let's call this a B, which means we would have risked 1.5%. And then if we took partials, let's say we took half our position off when it touched midnight open, which is reasonable. I like to, before it purges the buy side, I like to take profits just in case it just goes up and barely touches and then dips, which is exactly what we saw here. Let me show you. It's exactly what you see here, right there. Okay, look at that precision. It touches these equal highs over to the left in London from yesterday, to the point, to the pip, and then shits the bed and takes us out. So, and then also if you notice here, this trend line liquidity, retail liquidity here, underneath our entry. It's also an indication that price might want to come back down. Along with the fact that this dealing range, the 50% of the dealing range, there's a fair value gap right there, and this is the 50% area, and technically we've gone up and taken a little bit of buy side liquidity with the spread. So this could be a long entry again, but with the choppiness, we would just want to be done for the day. So we are not going to we're going to be as realistic as possible. We're not going to mark out a full, let's say we took a 1.5% risk. Let's call that 1.5 right there. Okay, so let me see if I can, there we go. So we didn't reach our full 80 and we only had 1.5 on, but we took half the position off and we lost the other half. So let's call that 0.75% of 100,000. Pull up my calculator here. Means we'd have $750 of risk on. Let's call it 75 points that we took in profit. So 750 divided by 25. We have a 30 lot position size, 30 times 75. It's $2,250. So we had a B plus setup, or a B setup, because of what would normally be an A plus setup. We were downgraded to a B. That's just to play it safe. That's something you always want to be on the safe side. We would have had 2,250. Oops. There we go. In profit. And let's call that 75 points. There we go, and stopped out at break even on the remainder of our position. Because once it's moved significantly in your direction, like right here, like as soon as we get right up around here, 562, our entry was approximately 508, so we're 60 points in profit. We would be at break even at that point. And we didn't get to our full target. But the price action here would have clued us in, hey, you need to take profits. And let's just say we took 50%, half off the table here, as ICT instructs to do, and we've paid the trader. Well, then we walked away from a pretty sloppy day with a nice, we pulled off a nice profit there. And then if you notice also, once we took buy side here, you have a little bit of a fair value gap entry short. And then I imagine it'll dip a little bit more and then probably reverse to the upside. Let's see if that's the case. So we entered this fair value gap over here. Now we're going below this liquidity, these equal lows down here. And then look at that, yeah. So this is, I wouldn't quite call it, I mean, possibly seek and destroy looking conditions so far. But we definitely would not be taking any more trades after that first entry. Yeah, that looks pretty shitty. If it comes back down, yeah, this is seek and destroy. Look at this, back and forth and back and forth and back and forth and back. This is the most frustrating type of price action that any trader can experience. Look at that garbage. Okay, it's pretty clear that there's nothing else for the day, so let's just go ahead and speed this up. That's just a terrible day for anybody who got caught in the middle of that. Look at that shit on the 15-minute. That's just fucked up. Horrible garbage. So let's just get rid of all this stuff here. And we will slide on over to the next day. Okay, so we're going to play out London and see what happens. So there's orange folder news pre-equity, like 6:30 Central Time, 7:30 in the morning Eastern, and we're moving pretty aggressively to the upside already. It looks like we already had a return to midnight open. Took some internal liquidity here. I bet you on the hourly we have something like a this kind of looks like a breaker up here. But it's pretty sloppy. Yeah, look at that. On the hourly, we have this fair value gap, internal liquidity grab here. Right in here. Came back down to this one. And we've already launched off of that. Almost 200 points. There is no entry that we would want to take. With a full size at least. I mean, I would probably stay away from today. You got this massive order block here that spans, you know, almost 80 points, an 80-point order block, which is just crazy. This guy right here. Come down to the 5 minute, see what's going on after equity open. Probably return to the order blocker. Yeah. And then it will come tap it. Oh, it left it alone for the afternoon session. And throughout Asia. How interesting. Look at this. Just chop, chop, chop. So big move happened pre-equity open. There's a, if you're a gambler, you take this as a long, but I absolutely don't recommend it. Pretty interesting that we didn't, I mean, we set up liquidity here, but still didn't touch the order block. I just find that fascinating. It usually doesn't happen. Oops, we're already in the equity open here, so let's back up so we're not cheating. So no trades for Thursday. And let's see what we have on Friday. Core PPI on Friday. And we saw, it looks like we got a preview of what would happen, which is not ideal, but it is what it is. Go back up to the 15-minute. Mark out our midnight open price. Right about there. Get equity open going. So overnight, sell side was taken already. Buy side was taken already. Looks like we set the low of the week on Wednesday. We have this order block down here. It's still untouched. It'd be pretty interesting to see if there's anything. So since we've had BSL taken, we'll mark that out. Come down to the 5-minute. There's a pre-equity open short. Whoa, look at that. Holy shit, man. That's PPI news, I think. 7:30. Yeah, look at that 7:30 candle. So 7:32. It's like 200 points of movement already. And if you tried to short early, you would have got blasted out if you had your stop loss above here. So pre-equity moves are pretty fucked up sometimes. And would you look at that? We finally saw a return to that order block after building up liquidity right above it. Sharp reaction off of that, but I wouldn't trust it until you see something after equity. Got some sort of a okay, I think that if you were a gambler, you could probably enter here too, but it might not work out very well for you. I think we'd be done for the rest of the week, honestly. I wouldn't have seen, after this move here pre-equity, I would not have any confidence in taking post-equity. I mean, you've got a OTE entry, I suppose, on the 5-minute. Technically. And you've got this massive SIBI here. Have we even gotten to the EQ of the SIBI? Let's see. Nope, not yet. So I'd be careful there. Now we have. And if you had any measure of a decent stop loss, you would have been taken out there. So it went and filled in the SIBI. Now we're in the lunch hour. And there's your continuation, more than likely. Yeah, there it is. Maybe repeat the low or something. Pretty garbage price action, honestly. So I mean, again, if you're aggressive, you got this 3 drives here. 1, 2, 3, taking out this buy side liquidity right before it barely fills the SIBI. Then you got some form of a market structure shift here and a fair value gap entry here. But for the purposes of our model, or ICT's model, and the way that we use it, that we would have no entries yesterday and today. And Wednesday would have been the only entry that we would have. Yeah, look, it's just a repeat the low setup, and then boom, now we're gone. Okay, so let's take this off the chart. We'll try to do better at stopping it before the next day's equity opens, so we don't get any previews. It's better to do this blind. Like, I'll scroll really fast past any of the days that I'm not supposed to see, and I'll click the replay button before the day that I want to start, and then you just want to start fresh each day, not allowing replay to play out past your equity open before you're ready to look for trades. That just keeps you honest. There we go, right there. So this is the next week, the Monday of the next week. And there's no high impact news. But let's go through the week and see what else we have. On Tuesday, you've got CPI, FOMC. So it's an FOMC week. They like to move early in the week and or just chop around until the business is done midweek. Core retail sales. It's just full of high impact news. And again, you know, we're back testing December, so results are not really ideal compared to other months. Looks like flash services. There's high impact news on almost every single day of the week for this week. So we probably just want to skip it. So we would have had no entry on the 8th, none on the 9th, and we want to skip all the way through this week. And then we go to Monday, December 19th, and that'll be our next quality day. Hopefully. Okay, now we can slow this down a bit. Draw out our equity open. And after a week like that, you would want to look at the higher time frame and see what happened. If I recall correctly, we tapped a daily SIBI and a monthly SIBI that had been, we'd just been consolidating underneath it, dicking around, almost getting to it, almost getting to it, almost getting to it for like a month and a half, if not longer. And then they used that the news-filled week last week. They used that to go ahead and return to that SIBI and then shit the bed from there. That's what you're seeing up here, if my memory serves correctly. Let's go check that out real quick. Yeah, look at that. So here's the SIBI I'm talking about. Oh, I'm so sorry, guys. Okay, there we go. Here's the SIBI I'm talking about here. This guy right here. And this is the daily chart. See that? Tapped it, 12,197, and now we're like 1,000, shit the bed 1,000 points, which is just crazy in 1 week. 1,000 point drop. Insane. So we'll be definitely favoring shorts for this week, especially considering we haven't taken out any of this sell side yet, and it's primed to do so. That's what it's going to be attacking next. We want to be careful though, because we're hitting this daily daily propulsion block. I guess it's an order block technically. This looks more like the order block here, but either one, I guess. Okay, so we're favoring shorts. And we don't have any high impact news, so we could get chop or standard delivery. Those are the two most likely options. Looks like we've made a buy side grab just now during London. And it appears that we've got some sort of market structure shift with a multiple fair value gaps. The one in the middle got taken, and it could just immediately shit the bed, equity open. If that's the case, we'll miss it because we're focused on post-equity entries only for this series. When you get a little bit more advanced, you can anticipate these. I mean, this would be an absolutely valid short here. And we might even see a return up and then down, but more than likely it'll go straight down. And I have not previewed this price action. I'm not, not trying to cheat or anything. This is just my best guess. If I was in a live environment, I would take this short here, this return up to this fair value gap at the 50% of this displacement. That's valid for me. We took overnight lows in a pretty clear fashion. So I'll even call this step 1 BSL, 15-minute BSL taken. These equal lows right here on the 15-minute. Market structure shift was this candle. Entry was this candle for advanced pre-equity entries. Let's find us a post-equity entry, maybe a continuation or something of that nature. And I have failed to mark out midnight open, so let's do that as well. Oops, there we go. Put that in the back. Maybe make it a little cleaner by doing that. Yeah, that'll work. And looks like we've got a breaker here, a breaker here. May see a return to this breaker, or it could just fall through this. Let's go down to the 1 minute and see what we can catch. Okay, let's go post equity. And that was your entry right there. Happened pretty quickly. You may not have got it, but I was expecting this to hold, which is why I drew it out. And if you'll notice, if we go back up to the 15 minute or the let's call it 15 minute. We're in this breaker here. That's what happened. And we came up and almost tapped the EQ of the breaker. Let us go ahead and take our before screenshot. There's an entry, pre-equity open, there's your entry if you're aggressive or if you're advanced. There's a return, another return. You get multiple opportunities to get in here. Another return, back in. Okay, now here's equity open. You've had multiple chances to get in here. If it comes back up in any way, like I would have a right here at this discount line, I would be looking to have like a sell limit here, just in case I catch something, and I would have the I'd be ready to take a loss in case it came back up to this breaker, which would be coming up in, this fair value gap, which would be a chance to re-enter. But in this case, our first position would be right there. Absolutely valid entry. Not that we're like knowing that it's going to barely touch and shit the bed from there, but we do know that this is a valid fair value gap, at least on the higher time frame. If you look at the 5 minute, if you look at the 15 minute, it's already done its work here, right? And that reaction off of this fair value gap at the 50% of this displacement range after the market structure shift below these nearly equal lows, after buy side's been taken, absolutely could have taken this pre-equity. And if you had, this would just be like a pyramiding entry. With that logic in mind, it would absolutely be a valid post-equity entry. Even if it stopped us out, we would have been right on the direction for the day most likely. So we could have gotten back in up here. But as you saw, it just came up and swept one more time, and then it shit the bed from there. So let's take our before screenshot. And I'll pull these over a little bit so we can get that in the view. So taking buy side above midnight open still. Valid fair value gap on the continuation. After buy side was taken here. If you notice, it's a repeat of the overall parent model. Buy side taken right here. Shift in market structure. Take the low. So sell side's taken now. Multiple chances to enter pre-equity. When you see something like this pre-equity, you know equity with a good deal of certainty is just going to immediately move in one direction. One-sidedness is on the way. That's just from watching price action over and over and over. So let's take a screenshot. Bam. Let's put our entry on. Just like that. You could stop loss above the breaker, or you could go above this here. Yeah, I would want to do that. So we'd have like a 20-point stop loss, just to give some breathing room, just in case. And then of course the obvious target is this down here. This opposing fair value gap down here. And again, it's going to be favoring shorts for the week in the foreseeable future, so we could even come down to these nearly equal lows here into what appears to be a small 1-minute breaker over here. So that's what I would target. Probably about, let's go back up to a higher time frame. Yeah, we would target this. We want to see that filled in, so we target right about there, just to be safe. Maybe leave a runner on to go see the bottom of this here. You had an entry on the 15-minute right here in this middle breaker. Fair value gap. So yeah, all in all, not a bad setup here. Let's go to the 1 minute. Bring this over. Right on the discount, as close as we can get. You got a 2.5 to risk to reward. And let's see our, okay, there's our during. All right, so let's go back to our spreadsheet here, because we would have been filling this out beforehand. So it's a post-equity entry, although there were multiple pre-entries. We've got an external liquidity grab overnight. Displacement is well over 60 points, so that's nice to see. Less than 25-point stop loss, which is great. And let's go calculate our drawdown. Four points of drawdown, which is minimal. That's nothing. Absolutely can sit through that. That's not even any form of heat at all. Price action's fairly clean. Trade duration, we'll have to see in just a minute, but there's multiple fair value gaps at entry. Let's call it 3. In proximity, you've got this one here, this one here, this one here. There's 4 technically, but we'll just leave it at 3. Proximity ray, yeah, we're inside a 15-minute breaker. So there's that. slide this over, slide this down. Let's take a look at our grading system. Was it post equity? Yes. External liquidity grab? Yes. 60 points displacement or more? Yes, it was. Less than 25 point stop loss in a safe area? That's correct. The only thing we don't have is singular fair value at entry. So altogether we have an A setup, which is definitely great. It's always nice to take those A setups. We could risk 2 to 3%. Let's call it 2, just or 2.5 really. And then we're targeting 50 points. So 2% risk is 2,000 divided by 20 point stop loss. Let's just take 100 lot position size. 100 times 54-ish. Let's call it, let's be accurate, say 54. So 100 times 54 is 5,400. Not a bad day at all. Okay, let me pull this down. Alrighty. So we take our during screenshot. And let's let the trade play out and see how long it took. Run straight to our profit. That's just amazing. I love when that happens. So 1, 2, 3, 4, 5, 6, 5 actually. So we're literally in the trade for 5 minutes. We could leave a runner on, which I absolutely would do. Leave a runner for this down here. And so let's see here. 5 minutes. Trade duration, less than 15 minutes. Okay, y'all, that's gonna do it for today. We'll come back and hit a couple more, and then we'll basically be into live price action. If we can catch up the next few weeks, we'll be into backtesting December, the end of December, which is always pretty crazy. And I hope you've enjoyed it, and I'll see you next time.